And you always got idiot managers, the black swan types like that was at the Silicon Valley Bank that did stupid things. We have more of those black swans swimming in the lake. We don't know where they are. I don't consider Credit Suisse bigger fish. If Credit Suisse is going to fail, let it fail. I mean, my whole point is we should have let Silicon Valley Bank fail, Signature Bank fail. That's not the end of our system. They represent a tiny fraction of the economy. The whole issue is around confidence in banking. Nationalizing the bank is, I think, what happened here. And now going forward, I think a lot of bank managers are going to say, wait a second, I have no risk. I'm going to go crazy like those guys did at the Silicon Valley Bank and do stupid leverage things, because if anything goes wrong, as long as I stay within the baseball rules of banking, nothing can happen to me because the Fed covers all my depositors. I don't have to worry if I'm crazy. That's the problem we've got.
What is real? What was going on yesterday or what's going on today?
Combination of both. Right now, the narrative with investors in the banking sector is how punitive is this going to be in new regulations? Let's take the regionals first. There's going to be problems ahead here because, frankly, I don't think just guaranteeing deposits is enough to keep everybody with all of their money in just a regional bank. There's going to be diversification. Even in our own portfolio, we have now moved our assets across 5 different financial institutions. I don't care anymore to take risk and concentrated risk, and I think others will do the same. That's problem number 1. Number 2, if you're a regional bank, I think there's going to be all kinds of new regulations that keep you more liquid in the short term, which means you can't deploy that capital to make returns for shareholders. And then there's this bigger question, which I think is going to weigh on the entire sector. What did we just do? Did we just nationalize the banking system? Because if there's no risk at all for any depositor of any size, what stops banking managers who are just compensated on equity from just going crazy and doing things that are going to be very extended in behavior to try and jack up the stock price because they have no risk? And you always got idiot managers, the black swan types like that was at the Silicon Valley Bank that did stupid things. We have more of those black swans swimming in the lake. We don't know where they are. So I think we basically have to make a decision, and I think this is something every investor is thinking about, is maybe this sector, we've got 11 sectors in the economy. This sector services all other 10. Maybe it's just a utility that's going to be way over-regulated and make really lousy returns for shareholders going forward. And I think that's the debate going forward.
Another debate going forward is that of good intentions that could potentially go bad. Concerning the Silicon Valley Bank rescue, Ken Griffin, I should say, the billionaire investor, had said it was a mistake and we're going to rue the day. He said that U.S. capitalism is breaking down before our eyes. What do you think of that?
No, it's a bold statement, but I think it's a narrative that is coming into the market in terms of valuing what the value of banks is and will be, in the future. Because the thing we have to think about that started all this, and the narrative that's only 48 hours old, this is no different than a really bad manager in any other sector. So the combination of idiot management at Silicon Valley Bank with a board, an overseeing board that was incompetent or negligent or both, and obviously you just announced they're going to be investigated, and of course that should happen. But that's an isolated incident. If we had just let that collapse before we gotten into panic, we would have had a much better situation that would have said, okay, 95% of these assets were covered, no problem. And so 5% for people that had more than $250,000 per account is something the bank could have absorbed. Those investors are very high net worth investors, or they're very sophisticated hedge funds and other businesses that can take a 5% hit. But that's not what we did. As the government said, okay, we've got concern about the overall banking system, let's guarantee everything. That's moral hazard right there. And something else that people hadn't focused on prior to this whole narrative started around payroll. Everybody was saying, oh my goodness, if my money's sitting in SVB, I can't make payroll, which is illegal in many states, particularly California. Well, the government already allocated $250 billion plus into something called the Employee Retention Credit Program back in 2020, and nobody took advantage of it. Nobody's even called it down. Less than $9 billion of it has been put to work. So why aren't people looking at that? It's still available for the next 23 months, and I think people will start to look at that now too. There's a lot of problems with what we just did, And often policy has unintended consequences. Nationalizing the bank is, I think, what happened here. And now going forward, I think a lot of bank managers are going to say, wait a second, I have no risk. I'm going to go crazy like those guys did at the Silicon Valley Bank and do stupid leverage things, because if anything goes wrong, as long as I stay within the baseball rules of banking, nothing can happen to me because the Fed covers all my depositors. I don't have to worry if I'm crazy. That's the problem we've got.
That's very interesting. You know, Robert Kiyosaki of Rich Dad Poor Dad fame says it doesn't stop here, and certainly with Silicon Valley Bank or even some other regional banks, he says it goes higher. I want you to respond to this, Kevin. This again from Robert Kiyosaki.
Well, let me say it again. The problem is the bond market. And my prediction, I called Lehman Brothers years ago, and I think the next bank to go is Credit Suisse. And if that happens, Japan.
Because of its exposure to a lot of this?
Yes, because the bond market is crashing.
In other words, he's saying bigger fish are on the way. Do you buy that?
I don't consider Credit Suisse bigger fish. If Credit Suisse is going to fail, let it fail. I mean, my whole point is we should have let Silicon Valley Bank fail, Signature Bank fail. That's not the end of our system. They represent a tiny fraction of the economy. The whole issue is around confidence in banking. But I think, cooler heads would have prevailed 48 hours later, realizing that really 95% of the assets are recoverable in Silicon Valley Bank. Now, you talked a little bit about selling this bank. The franchise value of the word Silicon Valley Bank has been trashed. It's no better than radioactive waste. It's become the poster boy for idiot management. So no one's going to want that brand, not here, not anywhere. And so I'm not really confident that they're going to get bought. And so when you basically guarantee a bailout for every single depositor, what about the people that were outside painting the steps, or the person that runs the kitchen, and all of those creditors in there? They're going to get nothing. That sounds very unfair. And so that's the nature of what's occurring here. But at the same time, when one bank fails, it doesn't mean every one of them fails. This is not like '08 in any measure, because that was everybody's mortgage-backed security problem. Silicon Valley Bank had stupid loans out. That's the bottom line. Everybody's figured that out. No one had ever heard of this bank just 48 hours ago. Now they're the poster boy for doing stupid things in banking. We should have let them fail and not panicked and not changed policy for the entire banking system.
There is a parallel here that the SVP executive in charge was a former Lehman CFO. I don't know if there's anything to that, but I do want to get your take on the market response today. Obviously feeling that we've just dodged a bullet, whether that's short-lived or not, I have no idea.